We got some unfortunate news for Tesla stock investors as sales figures across the pond in Europe are down significantly year over year. I'll reveal what those numbers could mean for Tesla stock investors and what I think about the company at the new higher valuations since the stock price is up by so much in previous weeks. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So, according to the European Automobile Manufacturers Association, Tesla EV registrations, which are a proxy for sales in Europe, fell to just 14,831 units in August, which was a 22.5% drop compared to a year ago. But what makes this even worse is that total EV registrations in the region, which includes the UK and the European Free Trade Association, were up by 27% in August, with overall registrations up by 5%. So overall, EV sales in the region were up almost 27%, and Tesla's sales were down 22.5%. That means the company is losing significant market share in the region. Imagine a category where you're having a lot more consumers coming in, right? 27% more consumers are coming in, and Tesla is generating fewer sales than the same time last year, even with all those extra customers coming into the market. That's a really telling sign and really bad news for Tesla stock investors. Now, I understand Tesla stock investors have grown accustomed to ignoring the sales figures for electric vehicles because they've set their sights on driverless car technology and robotics. And so when they see numbers like this, they tend to just brush them off to the side and say, well, that doesn't matter because all that matters is driverless cars. And when Tesla launches driverless car technology, they're going to generate $200 billion in profit. And then when they generate sales from robotics, it's going to generate $1 trillion in profits. And the numbers start to get really, really large, really, really quickly. And so they look at these numbers and say, okay, we can ignore them and we can still buy Tesla stock regardless of all these bad numbers coming out. But I will caution Tesla stock investors not to ignore these numbers because where do you think the company is going to get the money to invest in driverless car technology, to invest in robotics? Those technologies are not ready. They're not ready right now. They're not ready to be sent out into the market and generate sales and profit. They need further investment, further research and development before they can be introduced to the market. All of that costs money. Where is that money going to come from? One thing Tesla does really well is sell electric vehicles for a profit. They're one of the very few companies in the world that sell electric vehicles for a profit. And if their electric vehicle sales are declining, that's less profit, less cash flow coming in to invest in that new technology like driverless cars and robotics. That's why these figures are so important for Tesla stock investors. Not because the valuation depends on it, because it doesn't. I think Tesla stock investors have gotten past this. I think the management team has done an excellent job of storytelling and getting investors to look into the future, to look beyond these headwinds, to look beyond these declines, to look beyond these competitive disadvantages, the damage to the brand, all of which has allowed investors to just look ahead, right? And still paid premium valuations for Tesla stock. And when I say premium valuations, I mean super duper premium valuation. Tesla stock is trading at a forward price to earnings of 217, near the most expensive this stock has been going back to 2020. So the enthusiasm surrounding Tesla stock has arguably never been higher at a time when EV sales are arguably the worst they've been in many, many years, especially looking ahead. The prospects for EV sales for Tesla is not looking good at all. And so I would caution Tesla stock investors to not look beyond these figures too much because it does depend on the success of future technology. The better they do with EV sales, the more cash flow they can generate, the easier it will be for Tesla to invest in this new technology. Otherwise, if EV sales continues to decline and is not generating positive cash flow anymore, which it's at the risk of doing, right? Their operating margins are shrinking into the mid to low single digits, and they're at risk of shrinking further still. And if it goes further still and goes into the negative territory, then the risk increases that Tesla will need to sell shares of stock in order to fund those investments in driverless cars and robotics. Now, we're not there yet, and Tesla still has a great balance sheet, $30 billion in cash and equivalents with close to zero debt. So it has an excellent balance sheet. But investments in artificial intelligence are very, very costly, right? You see the other large tech companies, Alphabet is spending $80 billion, Microsoft $80 billion just this year alone, Amazon over $105 billion. Tesla only has $30 billion in the balance sheet, right? So that money will run out quickly unless Tesla is generating cash flow from EV sales. The other segments, the energy segment was thriving. That is up until the most recent quarter that the energy segment hit headwinds, and the headwinds are worsening as a result of the impact of tariffs are hitting that segment. The management team said more so than any other segment. So, investor enthusiasm for Tesla stock arguably at the highest levels, just as the company's performance is hitting arguably the worst levels. That's not a strong combination for investors. The risk versus reward, unattractive. And I've had Tesla stock rated it to start 2025. I rated Tesla stock as a sell. And after the first few months, the stock price crashed by 40 or 50%. And then I upgraded it to a hold. As it's moving higher, I'm closer to downgrading Tesla stock to a sell, but not quite there yet. One of the catalysts I'm waiting for is the announcement regarding the lower priced model. That could be the big catalyst that drives EV sales further and allows the company to reinvigorate cash flow, to reinvigorate margins, which it can then invest in driverless car technology and make quicker progress on driverless cars, which can retain this investor enthusiasm, something that Tesla is great at doing, right? They don't need to generate very strong actual results because they're so great at marketing those results to investors. So they just need, like mediocre results, and then they can sell those mediocre results as excellent results to investors, which are, or, you know, eager to believe in the long-term story of a company that could be, a $10 trillion market cap or a $20 trillion market cap. They just need little bits of evidence to show that the company is moving forward. And I think that lower priced model could be that little piece of evidence that could reinvigorate sales, which reinvigorates cash flow, which allows the company to make, a step increase in their investments in driverless car technology, add more individuals in their research and development team, increase the investments in GPUs that they add to that. And so, make further progress, accelerate the progress there. And that could be the next leg higher for Tesla stock investors. So that's the next catalyst I'm looking for in the near term. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.